everybody, great to be back here with you with Swing Trading. My name is Mike Fairborn, and hey, today I wanted to really take some time and look at those entries, the all-important entries on the swing trade itself. We look at a number of different price patterns here, but what's happening towards the end of that price pattern? What specifically type of indicators could we use in conjunction with each other to give us maybe some clearer indications when we're using more than one indicator? Perhaps some traders will do that as to signs that, hey, that swing trade is ready to begin. So we've talked about patterns, we've looked at different setups, but now we're really looking at kind of just that pivot point right there. What is going to signal that move to take off? Some fun things to look at in that regard as we combine multiple indicators to do that. And I am joined in the chat by a good friend and colleague of mine, Cameron May. You can find him in the chat. You can find him on X, as a matter of fact. Cameron May CS, and I am Mike Fairborn CS. Make sure that you get those right. I did find an imposter that had Mike Fairborn CS _. He had several thousand followers. It's interesting, but they use our same images, our same descriptions, etc. So those are important there, but hey, good welcome to all of you. Hello to you, Taylor J. Richardson. Welcome. Scott, Greg, Chena. Hello to you, Sharon. We've got Will. How's it going? Will, Kelly, Ken, Posh, and others. Any questions, comments you have, definitely throw those in the chat box so we can address those for you throughout our discussion here. But looking forward to getting into this, folks. Let's hit some disclosures to get the show on the road here. Information here is for general information purposes only and should not be considered an individualized recommendation. Now, the Paper Money software application is for educational purposes only. Now, investing does involve risk, including the loss of principal. Now, there is no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee, actually, of future results and dividends. If we get into those, the dividends are not guaranteed. Okay. Now, with that, too, let's go ahead and just hit our next slide. I wanted to state that futures options trading does involve substantial risk, not suitable for all investors. Some additional points listed there on that. A real quick note, just to get us all on the same page here. That's a good look. That's a good solid look of what a bull flag looks like, really over a swing trade time frame. Short-term time frame, days to weeks, 3 to 14 to 15 days or so, right in that range. Some traders will take it up to a month's time frame. Honestly, I've seen that happen. They'll say I swing trade up to a month, but 3 to 15 days is really what is common. So we're really in this class just looking at the key portions of a potential move. When it might start, when it might begin. You can see the layout here is that bull flag. We'll just go ahead and draw that over here. Kind of a strong upward move, so a good showing with price action, followed by a very, very mild consolidation, as you can see right there. Really light consolidation coming down through here, which oftentimes is very telling that we just don't have the amount of selling pressure to match the kind of buying that we saw over here. The buying, or the buyers, oftentimes are way outnumber the sellers, right, on a bull flag kind of a setup. And that's what can position the trade to run those 3 to 15 days higher, for example, in that range. Today's discussion, though, folks, is simply going to be on, what are we going to be talking about here? What sort of indicators can we combine to maybe look at higher expectations of a follow-through of a run? Besides just, a one-bar move, here's a nice break above a trend line. I want to actually talk about that a little bit today, something I've been using for quite some time. So keep that in mind. Of course, we do look also, if the markets do turn bearish, risk off type of situation, there is the bear flag as an example of when we might trade a swing trade to the downside. There you go. Lower lows, lower highs. Key point here, it's just going to be the key. How do you distinguish between the two? Because there are some similarities. I mean, a lot of people would say, Mike, gosh, that's a bull flag right there. Until it's not a bull flag anymore. The key underlying factor is what was the direction of that trend when we got to that point? Well, it's been down, defined by lower lows and lower highs. Key point, I answer that every once in a while in that class, and so I just wanted to kind of front run that a little bit, so to speak, just to get that point across and state that, hey, that's, a trend really does play a key role into what we're looking at in terms of the markets there. All right. Well, let's just do a brief, and I mean a brief overview of the markets because we do have a lot to address here in our class, folks. This was an initial ascending triangle. We had another ascending triangle right here on the market. Did a great job of breaking higher, actually. We might actually, and this does happen from time to time. Case in point, let me show you guys this right here. This is fascinating. Don't forget about some of these arrows that you've drawn previously. In fact, if I just activate this drawing, I'll extend this exact same drawing right there to the right a little bit. You'll notice what happened? We bounced off of it. We broke above these ascending triangles. They can be indications of strength, but they can also represent support levels on the other side too, as a possibility of a bounce trade. I mean, look over here with me. You can see us bounce a little bit higher. Now, of course, we do have some resistance over here. Let's zoom in just a little bit more so we can kind of highlight that there. But they also represent, so as I said, support, but you know, if they break below that level, well, it could represent resistance. And by the way, we have another line. I'm just going to draw this in blue coming up through here. And sometimes those lines, I don't know why this happens, but sometimes prices will come down and hit when those two lines cross. And it can act as maybe even additional support that some traders might consider because you're getting two lines coming across there. Look over here, you can see kind of something very, very similar to the same thing. You got that right there. Did we bounce? Where was a key support level that came in? Well, all we had to do was extend this line over, ascending triangle, and we got a little bit of a bounce there, didn't we? So, like I said, they can be useful. There's one example there of a bounce off that upper line. There is a second example bounce off that line. And I thought I'd point that out because not only does it represent support, but at the same time, you don't see this all the time. You don't see ascending triangles all the time, but just extend it over to the right, you might find an interesting support level that you could be looking at for a bounce as well. All right. Well, with that, I wanted to do this. I wanted to go over here and point out for you a couple of different things in terms of what we looked at last week. We did have, there was an Intel follow-through trade that we looked at. That was a swing trade. This was already this was last week's, but you can see over here, yeah, there was I should say the week before, actually. This is kind of a classic example of a move to the upside and a breakout. We literally put the trade on. I think it was like the very next day it gapped up and hit the target. That can happen sometimes. We didn't get the same thing happening over here, though, with PSX. We did get a rally. It rallied higher, but it actually pulled back a little bit, too, and that's not too terribly unusual. You can still see we have our potential exit level there in the form of a stop at that, at that price. We already mentioned that the stop doesn't guarantee a price, an exit at that exact level. It competes with other existing sell orders in the market for a trade. But there you go. I guess we got into that a little bit over here, but we let this stock run, and we did take out a prior high, which was a positive. And just like, a diagonal trend line, draw these lines. You can call them a trend line. Well, it's not really a trend. Sideways trend, maybe. But you're going sideways through there. And this can act as an interesting level of support right there as a bounce. You might have to. This is a kind of one of those interesting candlestick patterns that I learned. I learned it, folks. It was called the Three Soldiers Down. My first book on technical analysis I ever read, it was on Japanese candlesticks, and it was just three soldiers down, and you get it a lot of times. Here's a case in point right there. Three soldier down rally and a bounce. By the way, this is something that could also be looked at is the possibility of a swing trade if you're looking at a follow through afterwards. I mean, you take the high of that move right there over the three soldiers down, and let me just zoom in right there. You take this high perhaps and a break above that high. Just tying it into our discussion here, some traders would say, if I get a bounce, I got a three soldiers down, you get the candle, you got a support bounce, and then you're starting to break above there. Some would say that could be one of the indicators that could be looked at for an entry point on a swing type entry. What did I just do there? Threw in candlesticks. Candlesticks can be used. They are they're price patterns really on a small scale. This happens to be three of them, but three candles in a row, you have to have three soldiers down, but those can be interesting. for points to start with. I mean, for example, we just said something like a candlestick pattern here, and then a hold above it, close above the high of the low day, right? If that were to happen, could be another form of an expectation for prices to run. So when I see these, I want to bring them up because, yeah, that could be construed as an entry by some right there, but they might say, give it another day as well, or let's get another indicator in there to kind of help us out a little bit. Okay, so there were some things to look at in terms of PSX. By the way, over here, money flow remains very, very strong. Look at that. I mean, we did hit highs over here. Pretty good on the upside. Collectively, it was about the same. So we didn't have a ton of volume up top, but not a ton of volume coming back down either. In fact, even lighter volume on the downside. So we'll see what happens here. Now, a key point that we always like to address in these classes is that we do have that potential exit there in the form of a stop. If prices were to do this, if they were to inch up higher here, just to break out a little bit right there, okay, and get above the prior high, then this stop right here, we would move that to the next low. That is one adjustment that we've been doing in this class, and we've been doing other adjustments as well. We, other sorts of indications as we're waiting for the target to potentially come into play here. And where would that target be? In terms of a flag pattern, again, so that's going to be, here's really kind of the pull of the move right here, either to here or here. Sometimes this is just sort of consolidation. We'll go ahead and call it here. We would take this price movement right there in price. We're just adding that to the last major low right there, and we're looking at this move coming up. So this is kind of like an extended long-term. I'm eyeballing it here, but maybe somewhere in here, question mark, would be the extension of this price run. Do you see the prices I'm looking at here? I'm taking this price move and I'm basically just adding it to the low over here to get the target. Now, the swing trade we looked at, though, in this class was a little bit shorter term in nature. We just said, here's the low and here's the high. Now let's measure it off of this low. And where's that high going to be, folks? It's very, very close to that 150 target. Using one of the drawing tools is an extension over here, Fibonacci retracements to the right. If I do a single click, let's zoom in. If I just do a single click right here, and then click again at the top of that run that we've defined as the swing, I can then pull this range down to this low before the move begins, and there you go. I'm sorry, it wasn't quite 150. No, it wasn't. That's more like the 138 retracement, 138% of this move, which is another, Fibonacci level. But actually, we got darn close to the 100, didn't we? It's about 144.40. We were also saying that there was a longer term extension here, right over there to either here or there. And that would have put us, yeah, definitely closer to the 150, 160 range. In fact, let's just do it. In case we do get a bounce over here fairly soon. If that were to happen, what would that look like? Click one time, click again. Oh, right there. I'm going to pull it back to the low before the move occurred. There's your 100. I'm sorry. It was 160 range, roughly, 161 or so. But that gets you, that's the longer term target 2, T2. This is the shorter term target 2 right about there. T2 on a short term, right? So I realize this can take a little time to get down. I think it's great that you guys are here trying to learn. This is an intermediate term level class. We do have other classes that are more basic in nature, but this is one that helps us get projections of price patterns. That's one reason why a lot of traders, I mean, myself included, I do like price patterns, because you get that potential projection area where, that's where well, a lot of times the name of the pattern comes into play. It's part of the flag pattern. It'll flag to the prior high, or the next high, the extended move up, kind of the measured move of the initial range you're measuring there. So, yeah, it's a good thing to remember to keep in mind, but it does take time. And so we go through these examples each and every week. All right. So there we go. Let me see if there are any questions. By the way, Taylor, that is a shooting star. You're exactly right. I'm going to pull this up. So you did have a shooting star right there, which kind of got the possibility of a three soldiers down pattern occurring. You see the body of the candle. The wick to the upside is at least 2 times the length of the body, and you can see that right there. And then the move down. Good eyes. Exactly. I tell you, we've got a lot of technicians in this class. You guys are picking up on it. And we just tie in a lot of these sort of price patterns, whether they be actual flag patterns or candlestick type patterns. It's still kind of a price pattern in a way. It's just shorter term. And we tie those into indicators. And that was really kind of a key point that I wanted to bring up today as we look at maybe some potential, building on a price pattern and then adding in an indicator or two to kind of improve our expectations of the possibility of a run. Okay, James. All right. Well, that does, yeah, you can get it. That's where maybe these indicators could be helpful, James, too, because we'll see a lot of interesting things, like, for example, the money flow, some build up there, potential insights of, according to the money flow, accumulation of volume occurring there. So let's continue on, though. I want to look at a couple of these today. Here is a company, CRWWV. So CoreWeave, and there's another one, just change it just a little bit, CRWD as opposed to V. I want to look at both of these today and kind of show you some interesting initial potential indications as you're looking at it. I looked at, was looking at CoreWeave, and then I'm like, wait, isn't this similar to CrowdStrike? I pulled up CrowdStrike, and there you go. You can kind of see over here too, maybe like we talked about the past couple of weeks, there could be something more at play here. Look at this with me. I'm in my daily, weekly, monthly price setups. Click to the right. If I zoom in just on a weekly chart, that's kind of like a flag pattern here. See the move up, move down? We're kind of following. Now, you guys think about this. If this were to be an extension of that weekly price pattern, okay, where would that be? What would we be looking at? I got to pull this down. Oh, and by the way, as I'm giving you a thought, just to think a second to think about that, there is a survey in the chat. If you're able to fill that out, that would be fantastic. Yep, Cam's posted a survey. Appreciate that. So yeah, I think there's just 2 questions in the 10 if you liked it, or if you didn't like it. Of course, there's lower numbers, but hey, you got to like it if you like it. That is. But I look at those surveys. My manager does too. Any topic requests, love to try to fulfill those as well as we go into it. So, all right, just want to note that. All right, this is what it would be. First of all, we're going to use our extension here on a weekly and just kind of show you. There's kind of that longer term. I find that the ones that have weekly and daily kind of sort of flag patterns are interesting. And James and others, you might find that could help improve the expectations. Nothing's a guarantee, but you can go back in and look at prior setups and get familiar, use paper trading to kind of help out in that regard. But there you go. There's your 100%. Sometimes these weekly flag patterns are really, really extensive, I should say. That would be, from where we're at, that's 487 and that's 622. But just like they might happen on a daily chart, you might see them happen on a weekly chart too. What's interesting is we're actually getting, I'm going to zoom back to the daily right there. You know what that is? It's hard to see, but if I take out the lines, it looks like another flag pattern setting up inside of this pattern, kind of like that Phillips 66. Let's go back one so we can point this out, and we'll take a look at it right now. There it is. We don't need all of that, but remember, this may be coming out of a flag already, and we may be getting signs of that, according to what the market's doing. Let's go up top here and see what we've got. Now, do you see the flag pattern here? There's the rally up, very, very mild pullback. By the way, really, really good strength in terms of, let's say, the money flow. RSI really showing some strength there. I've got to kind of pull it out so you can see it though. And I'll zoom back out. That's a little bit easier. There we go. Yeah. And so there's kind of the consolidation right here, but notice it just came back very, very lightly. We talked about using So let's start adding in some additional indications here. Remember this? We talked about sometimes stocks in that very frequently, not in all cases, but a lot of times they will bounce off. What do we say? The 38% level. Well, I got to zoom in to even show you that. Do you guys remember that class? What? It's not giving it to us. Let me see. I've got too many indicators. There it pops up. And we said some stocks, maybe some of the patterns might show some strength that when they bounce off the 38.2. Well, this one is just like right there at the 38.2. We did actually, by definition, get a hold. That is, if you haven't ever seen me write it out, you have no idea what I'm talking about. It's not a term you'll find in the dictionary. Maybe, well, a dictionary of trading, maybe, but that is a close above the high of the low day. And you can see the low day right there. We did get a close above the high of the low day after that bounce. So let's just pause for a second and kind of count these up a little bit. What's the first thing we saw? Well, I mean, the very first thing is the longer term trend is intact, right? So we do have something like the trend there. We have a trend, okay, and then we've got potential for a price pattern within that trend, a flag pattern. We've actually got a longer term pattern. We got a shorter term pattern. We've got prices pulling back, like we talked about Fibonacci's a little bit ago. I think it was like 3 weeks ago. How that 38.2 it can be a stronger indication. It can be. It doesn't have to be, but it can be, and it kind of stands to reason too. If it holds a higher level of support, well, that might be stronger than like right here. You can't see it. You can't see it, but that's the 50, and that's the 60. We've just kind of zoomed in so much, 61.8 to be exact. Boy, I can't say 60, right? Some of those core technicians out there will backhand me on that. I mean, that's 61.8. That's closer to 62. That is not a 60. But that is the number, just like this one's so fascinating, 38.2. But that's where a lot of these bounces will occur, right in line with the Fibonacci. But will it, and so you're getting a little bit of follow through here as well. So look what we had right there. We've got the hold too. So on top of it, the idea is maybe getting some stronger indications or potential setups for a move. There are a lot of stocks out there that we can go through. That's one thing I'll try to do in this class. We just got to keep building our knowledge base and looking at more indicators. That is one thing that could be looked at. Okay, now another thing too. I'm going to point this out to you. I'm going to go over here. I'm going to type in the zero lag EMA, exponential moving average. Okay, and I've got this, and I've got the dual here. I'll just show you here. This is a couple. Yeah, actually, let's just do the single. That's easier. That is a crossover, though, and this is from a ThinkScript class that I built. This is not an indicator, although it's an indicator in technical analysis. It's not one that is uniform to this platform. Just using the standard, a 34 is interesting. We looked at it. You can look at other numbers too, but a lot of trends might be associated with close to a 34. Some will use a 17, like half that level, and like real strength can come around like say for example, I'm sorry, really short term might be a 10 or so, but this tries to really cut out the lag through the formula that we've created here. But this is also interesting too, sometimes on these flags. So keep an eye on the flag pattern itself. Around sometimes these zero lags can pick up an interesting level of potential support that might come in here. Now, the key thing too is that if you start to break below that level, well, that could be an issue too, right? That could be a sign that it could be showing some strength. And actually, you saw over here, the trend did change on a lower trajectory, but you had an initial bounce and you had some strength, but we didn't keep that trajectory. In fact, one thing you got to note with the zero lag is it might find support, but you could have other indicators too, because it's so tight to the range. It's trying to get that first initial indication, which it did show, of a weaker sort of a trajectory going up. Anyways, this is one that can be used too. You can also use a simple moving average as well. Those are really, really quite common. Just a standard sort of a simple moving average. All right. So what I'll do here too to point this out, folks, if you are getting uh, insights from this class and indications. I mean, you finding it helpful, go ahead and smash that like button. It does help the YouTube algorithm. Lets me know that you guys are finding this kind of content useful and informative as well. And I'm just going to pull this up real quick. Pull up our Trader Talks channel because we'd love to have you subscribe to the Trader Talks channel if you're not already as well. Now, it will say, just like it says right here, subscribe. But if it says D on it at the end, subscribe, don't click it because then it'll take you to, you'll be unsubscribed. But there you go. You just click on subscribe right there and you'll get it. Now, these other classes that I mentioned, there are playlists listed here. I'm going to point that one out if you're interested in the zero lag EMA exponential moving average. You can take a look at it here. Let me just pull it up. These are ranged differently each week. That is Mr. Ben Watson that helped me out last week. There it is right there. So there is your zero lag EMA. I give the ThinkScript coding for that if you do find that of interest. That can be helpful for some of the shorter term moves. But again, I always say there's not like a specific correct number on those. Each stock is a little bit different. You have to kind of go through and make sure that you're comfortable with it, and maybe it matches the character of that stock, or at least that trend. And I'm referring to, what time frame you're using there. All right, let's do this. I'll throw this into the chat box, though, so you guys can take a look at that. But that is the zero lag right there, if you want to check it out. All right, zero lag EMA. That's the playlist, but I do have it listed down below in the description section as well. But that will teach you how to use it and what's going on with it, how it does that zero lag. Okay, so that is one example, but we just included several in there. Now that we've kind of done that work, what might we be looking like if somebody was to do an example trade on this? Well, let's go ahead and just go into our drawing tool again. I can go down here. There are a couple of different ways to do this actually, but I'm going to go ahead and just use our extensions. It's so easy because it's just a click, click, and click. I'm using our smaller range first for our initial flag pattern. There's our secondary one right there. And you can see that actually the 100% move right there is about 174. I'll just say 174. It's a little bit above that, the way I've measured it. You can see right there, but about 174. Now, I'm going to hide this for a second. I'll remember that. 574. 574. Yeah, 574, 570. Just do 574. That's fine. They can be exact. You can zoom in and get the exact number and line that up. As long as it's close, we're just going to use that for this class, though, for now. And wanted to show you, though, that this would be considered a T1 target. Some traders will only trade to the prior high. That's T1. Now, this might work better if you have an expectation of maybe market weakness. Maybe we think the market's overvalued. We think, gosh, it could stall out at that level, and you might actually see it. And we just talked about it. What if you got a candlestick right at the T1? It was brought up earlier. Yeah, Taylor said, hey, shooting star. What if we got a shooting star right at the T1? Well, maybe we take some off the table. Maybe you take everything off the table. Whatever the case is, you could take a certain amount off the trade if you wanted to, but that's T1. So that is trading up to the prior high. So in other words, we get the flag pattern we like, we get the follow through, but we exit at this high. The T2 is the full extension that we just looked at of this move here added to. We take all that price action and we add it to this higher high, this higher low, and that put us at that 574-ish range right up here. And that would be the T2 target. All right? So that's what we want to do. I'm going to look at the T2 here. Always look at the T1, though, if you wanted to, kind of consider that. So let's do this right now. It's an expensive stock. I did put on a little bit yesterday just so we had it under our belt. You can see I put on 25 shares. And, folks, we're up a grand total of $13.75 on our paper trade. Not a lot. But I did put one in yesterday. I wasn't sure. I wanted to show it for this class because we did gap up a little bit. And we kind of tested it a little bit. But, if you can keep holding and holding sideways, it might still extend with the trend. Anyways, I did put that trade on. We could add in more. But I would just say maybe some traders might add on the breakout here. This trade has already been in place. We put it on yesterday because I was afraid we might miss it for this class. It might just take off like so many of these companies have done. Now, what we can do right now is we can put a potential exit level there in the form of a stop just below that 38.2. And what would this do? That 38.2% level. What is that going to do? Well, it's going to limit the potential loss, right? Again, we don't know exactly where that stop will fill, but it will fill. If it's a liquid company, a lot of times they fill very close to where the price is at. It's just not guaranteed. On the stop, it just triggers the order to throw it out there in the market. But let's just say, for example, this ends up being the risk or potential risk that we've got. Okay, that's our risk. And I'm just putting these in boxes so you can kind of visually check out that risk versus reward. Now, this is 574-ish, right about there, I'd say. So that's your risk, and this is your, but by the way, these are both potential, right? Reward. But that's why we're looking at all these different indicators to tie them in together. Do you guys like the size of those blocks? I do. I think the size of those blocks are nice. In fact, if I were to say this, what are we talking about, risk reward? I'm just going to kind of measure, just total eyeball it. There's 1-to-1, there's 2-to-1, there's 3-to-1. This might be a 4-to-1 reward, risk reward expectation that we might be seeing here. Okay. And so, I mean, traders do love those. Now, does it have to move up quite a bit? Yes, it does. That's for the T2, the T2 target. If we come over here and we look at our T1, no. I got in here, but I might be getting like this to the, I mean, it's kind of like a 1-to-1 sort of. So, does that really meet what you're after? Maybe not. One of the reasons too why we're looking at the T2 here is I just said, hey, we're in the big, whether it moves or not, we'll have to wait and see. But we are in the midst of the possibility of a bigger swing trade also occurring within our little swing trade, right? So maybe we have some longer term strength behind it is all I'm getting at here. But I put the trade on nonetheless, so you guys could take a look at it. Okay. All right. By the way, if you ever put a trade on here, I'm going to put that stop just below that 38.2 so we can get that in place. So let's do it right now. Now, what we can do, the market's still open here. I'm going to go over here into CrowdStrike, and we are going to set up, this is how we would set up a stop level. We've got to go down to stop. We've got to go good till cancel. And I've got to set it up. Remember, we've got to make sure this is all correct too. Minus 25 shares. It's very expensive. I want to say it was around 6,000 and change to purchase this. Okay, and I'm going to put this in here at that stop level, good till cancel, so we can at least have this in place. We can do the same thing actually too on the other end, our target, but let's just get this in place. I've got to move along here a little bit, and I'm going to give it a little bit of range just below there. It was about 160. Gosh, I mean, that is tight, but we don't want to give it too much room if we want that risk reward. I'll just say about 463 roughly. Okay, so we got to go down here, 463, and remember the importance of that good till cancel. Otherwise, if it's one of these day orders, folks, it's gone just like that, right? It'll just be gone at the end of the day if it doesn't trigger. And like on a day like today, it may not trigger. All right, there we go. So you want to read your order, make sure everything's in place, but that is, as it states right there, a stop order at that level. We put it in right there, you've got it. So there's our stop. So this is how we would put it in if, the order got triggered, and I just wanted to show it anyway, so we have it. All right, so let's do this. Let's do it. Let's go to the next one. So we were just going to change one letter there, CRWD. CRWV. We were just at the V. So here is another move. Now, this does have, and this is the extent of what we're looking at here. There was some news today. This is always interesting too, because I think sometimes you can tie in news to these as well. It does have, you can look over here, you can read whatever the case might be, but there was some discussion with Meta. Don't quote me on that, but I think there was some overlap or some additional discussion that the company was having. Well, we can just click on it, pull it up real quick, so I can show you all. And we'll just scroll on down to it, and there you go. There's CoreWeave, and yeah, Meta will pay $14.2 billion through December with the option to extend its commitment. Okay, so they are taking on an agreement for AI cloud computing, and that is CoreWeave as you're seeing it. Now, Coupa, which by the way, trying to overlap plenty of things today, but Coupa help us also with a follow through. Well, it could. That's a big contract. And, it might. One of the things, too, we look at, you could use as other indicators, too. Here is sort of a longer term possible flag formation and a shorter term one that we just started to move out of. We don't have a T1 target. We've already hit it today. We've got some big volume on this as well. But what I wanted to focus in on here was, with all that too, potential volume accumulation. Look at this. We are not at a new high on price. I'm going to clear this all out because the money flow tries, by the way it's calculated, we've done some discussions on that too. It tries to give us a sense of are shares being accumulated or distributed here. Now, that right there, folks, is a new high on money flow. In fact, we broke that high clearly right there. Right there at that level. That was a break. Oh, I got to pull it back over right a little bit. It's about right there-ish. Somewhere in here. Okay, you get my point. But that's called an early warning sign. An early warning sign, the accumulation of volume, where there are more buyers greater than sellers, according to the Mike Fairborn indicator. I'm joking. That's money flow. That's not why I chose this, because we had the same. No, I'm kidding. The key thing here is this is higher. It's fascinating because we're not getting it anywhere near that on price. We're at 136 and change. This is that, prices are at 180. So you mean to tell me that price-wise, we're this much lower, but there are more buyers that have come in since? Okay, a lot of institutions are very, very clever. And that's what it takes sometimes to move the stock, is you need big institutional buying. The retail guys, even we all get together and we start buying. It's very, very, very hard when you're looking at, well, even today, 65 million shares. A lot of times retail is just a drop in the bucket to big institutions buying. And that's what can be helpful here too. So we've looked at some core insights here in terms of that money flow indicator too, right? As it's tied in. So we used an indicator. RSI showing some strength as well. By the way, this one too, had that early warning sign, right? We started to break above the relative money flow highs over here. Isn't that a funny indicator? At 120, it said, according to the money flow, you should at least get to the 180 level right there because you're higher than it in that point. So building on some indications. All right, do we have a close above the high to low day? We do. We have a couple of swing trades too. We could throw on the zero lag EMA. We could throw other exponential moving averages on here as well to see this. But let's go ahead and just speculate here. And we'll quickly hit this one as our final trade. But here's a high. And that's the, very short pullback that you're going to get there. Oh, look at that. Very, very close. That 100%, the T2 target, very, very close to prior highs, which we see a lot. So it's right there. It's about 172. Let's set up that trade right now. It's not as expensive as stock, but we'll still just look at maybe 50 shares for it's over 100. We'll maybe make it easier for smaller accounts to purchase as well. Now I just went into the buy custom OCO bracket order. So that was about 174, I think. So over here, so our target, that is our limit over here, 174. Got to make sure we go GTC. Stop. Where's our stop going to be? Well, our stop could be below this point right here, or it could be anywhere in between. A lot of times traders will just say, if it's too far, but between where we're at here and the prior day's low, you might just look at an ATR over here too, like an average true range. All right, so I'm going to just kind of speculate. I'll put it about here, about 127, because the expectation is just going to run higher. So here's about a 128 on that. So let's go here about a 128 and another GTC. Of course, we cannot forget to make sure that these are all lined up too. They're all at 50. There we go. So 50 shares. There's our order today. I'm going to go mark it just to get this one under our belt, so we have this to look at next week. So here's the 174, the 128, our target, our potential exit level in the form of a stop. There you go. Always take a look at that dialog box, folks, and we'll send this guy on through right now. So we've got a CoreWeave already. We've got a CrowdStrike as well, and that's what we've got. You notice today, though, our key focus was really combining a number of indicators together. We looked at make sure the Caholds were there. They were within a price pattern. The trend was there. We also used an outside indicator. In this case today, we tapped into the money flow and showing the strength of the money flow. But we also introduced and talked about moving averages. A zero lag could be helpful sometimes as well on something like that, or just the exponential itself. So with that, everybody, again, remember, there is a survey link. Cam went ahead and posted that again. Thank you, Cam, for doing that and your assistance here. There is the crossover. By the way, I've included both of those within that link that I put out there for you earlier on for that class. So it's just in the description section, but the class will help you understand it. Folks, if you found use out of our discussion today, appreciate it. Smash that like button. You got to find value. If you find value, that is. If you did, appreciate that. But on that, hope you have a fantastic rest of the day. Look forward to future discussions. Take care, all.